Good morning, everybody. It is Wednesday, April 23rd, and the market is booming. Today, in our State of the Market emergency session, I'm going to walk through exactly why we're seeing what we're seeing. We're going to go through my three main levers to see if, hey, maybe we might be at a floor. And then we'll review Tesla earnings and start looking at Google earnings. So we've got a lot to cover. So let's dig in. Why don't we start by sharing my screen? SPX up 3%. We are over the 21-day moving average. That is the first time we have been even within a stone's throw of that average since April 2nd. And our first time over it on any time since, March 26th. So we're going on a month of not seeing the 21-day moving average. And now we have the S&P kind of breaking out of new highs, right? It is now at the high of the day on the 9th was 54.81. Our high today is 54.69. So that's kind of the last level I'm kind of keeping an eye on. And if we get there, then we're talking a move to 5,500, which might be in the cards. I believe we could see 5,500. Probably not today, but possible. All right. So is this sustainable? Now, I want you to remember we've been talking about three important pieces of the market, right? So we know if this is a head fake or not. We know because we've been consistent and watching the same things and seeing them play out. All right. Bond market. This was the first. Remember the big sell-off on Monday? It was all from that bond market scare. Bond market calms down. S&P rallies. Bond market booms higher today. And the S&P's up 3%. Now, do I want to see a close over this 21-day moving average on TLT? Yeah. But rates have really come off. If you look at the yields in the United States, the 10-year is down to 4.3. And the 30-year is back down below toward 4.76. We want that 30-year to get closer to 4.5. But, all right, we're making some progress here. That the 10-year down at 4.3, that's good. So the long end of the curve seems a little healthier today. Is this a chart that says all clear? No, but it's definitely productive in finding a floor. All right, my next lever was the VIX. All right, is VIX under 30? Yes. Log in over here because I want to show you guys something. All right, there we go. The VIX is under 30. What does our term structure look like? Now, remember, we want to see May below April. May below April. They're down to 40 cents. That is the lowest spread we've seen since we've been tracking this. June and July are almost on top of each other. So this front of the curve is starting to flatten up. All right, and last but not least, in that VIX complex, VIX 9-day minus VIX. Remember, this is managing the spread between the VIX 9-day and the VIX itself. And it is flat today. You're not seeing a lot of pressure on the front end of the curve. So that's not as encouraging as we would hope. I'd like to see this number down below 0. So we're going to keep an eye on this spread, but this is saying, hey, we could still have some front month movement. All right, so TLT, positive. VIX, positive, not perfect. Last but not least, is the Russell 2000 leading the market higher? Well, the Dow's up 2 3/4. The S&P's up 3.1%. And the Qs are up 3.7. IWM is up 3.9. The Russell 2000, 3.85. You're getting leadership out of the Russell 2000. So where is this all coming from? All right, well, it's coming from alleged, leaks of a softening stance on China, a willingness to negotiate. It's coming off of not firing Powell. It's coming off of word that the government is, going to make deals. And as bad as Tesla earnings were, there is a real, there was some modestly positive news about Elon coming back to Tesla, people like that. Also, I think just we found a bottom. If bond markets aren't going to fall, all right, if the bond market stays stable, we're probably done with our 3% days after today. And we probably see some normalization. Right, SPX, we're trading 54.55 right now. Approaching that close. So this would probably be the last day where traders are expecting a massive move. All right, let's take a look at early positioning in the S&P 500. All right, and so far, net sellers of premium and, relatively modest net change in delta. This is 500,000 is nothing, but so far today, you've got about even calls and puts, and you have more puts bought than sold. Could be coverage. But on the day, no real wild positioning taking place in the S&P 500. In the triple Q, we actually have net buyers of premium and bullish positioning. Same story in SPY. So all told, things are pretty flattish from a positioning standpoint. Now, one thing to remember is that there is a lot of money on the sidelines. There is a lot of money on the sidelines. So what do you do about this market if you want to get in? All right. Well, I'm going to present you a couple of different ideas, and then we're going to circle and look at Tesla. All right. Now, what index should lead us? What ETF or index should lead us out of this bull market? Right. Everyone's saying it. IWM. All right. And I can prove to you that it's an interesting play. It's an ugly color. There we go. All right. You are looking at 3 ETFs on a 1-year chart. On a 1-year, year over year. So we're going back to April of 2024. Only one ETF is down over that period. William says a lot of low quality companies in that ETF. Correct. There's also some high quality ones. And what's important is that this is the most interest rate sensitive one. And it has some catching up to do. It has some IWM has some catching up to do. I mean, I think it's an easy trip back to 200. Probably back to 202. That put us on like the April 2nd level. All right. So today is Wednesday. The index is up $6.88. Now, I think there will be ebbs and flows in trading as the day as the day moves on. We'll have highs, we'll have lows. I want to make sure that the Russell 2000 is clear of the 21-day moving average and is still leading at the end of the day. I want to see the SPX close above 21, above that 21-day moving average. Yeah, this is, folks, I'm not looking for an investment in IWM. I'm looking for a trade. And if the market is going to rally, IWM has your best risk reward in terms of how much it could rally. More volatile, more fun to trade. So getting back, I want to make sure that we close with the IWM leading us higher above this 21-day moving average and preferably remaining over 3%. Up over 3%. We get there, stick around here, maybe a little up, maybe a little down. VIX is going to be below 27 by the end of the day. And I'm going to be looking to buy the 195 calls for May 2nd, so a week from Friday. And I'm going to obviously wait. This is more of a toward the end of the day type of trade. So I can do that. Or I can use the leverage ETF that's only 25 bucks, up about 10% today. So underperforming. No, actually about in line. This is the 3X IWM. And I would be looking at like the 26 calls for like $1. So again, we're not looking for a investment. We're looking for a trade. Remember that. Okay. Switching gears, let's look at the major earnings from yesterday and the ones coming up. Tesla reported earnings yesterday. Now, Hannah and I walked you through how, after the bell, Hannah and I walked you through kind of earnings expectations. The implied move was 9.8. We're moving 5. So it is currently underperforming the way options were priced in. You know, we're only up 5%. What does this give us? When you get a big underperformance, look at the prices on Tesla options. Tesla options haven't been this cheap since February 28th, when the stock was $300. And, you know, we're up against that 21 day. Let's see it break. But let's have, you know, what I expect typically after an earnings, especially when it moves less, you expect premiums to get crushed. I'm looking for Tesla options to get back into the 50s between now and Friday. Mark in Texas was surprised that Tesla's up after bad earnings. Well, that's where sentiment comes in. Everyone knew their earnings were going to be terrible. Everyone knew their earnings were going to be terrible. And they were. And the fact that they were not a worst case, and then Elon, allows us not to sell off. So initially when the earnings came out, the stock basically sat. Then Elon came on and said, I'm going to be working here more and starting to go drop my government duty down to 1 day a week and be more involved with Tesla. Now you're up 5%. So it's sentiment. Jay says the only thing they are selling is credits, not cars. Well, they sell a lot of cars. The only thing they make money on is the credits. So, Jay, get it right. They sell a lot of cars. The Model Y is the #1 selling car in the world. They don't make a lot of money from cars. They make a lot of money from the credits. Even if Tesla goes to zero, Elon is financially fine. The job sector would be part that suffers if Tesla craters. I don't think Tesla's cratering at this point. Maybe the worst for Tesla is over. What do you say, Mark? Kind of looks like it. Today, trading the first day after earnings is always a mess. And so what I like to do, as I said, now that we've got that out of the way, these option prices are going to continue to fall. Tesla option prices will break 60, and I believe 55, and maybe get down. We get into the 50s, I'm going to be buying options with both hands. 55 looks like the level I am targeting. And I am going to be looking to put on a trade. So I want to tell you about, just recapping what we talked about yesterday. I explained that I start looking for pre-earnings trades about 9 to 10 days ahead of an earnings announcement. And then I look at 3 charts. I look at movement, option prices, and then the earnings analysis. So we've got several of these earnings now approaching us for pre and post earnings trades. As many of you know, we have a masterclass going starting tomorrow. Is going to be the kind of the kickoff, but our first real class is going to be next Friday. Over that is earnings. I'm going to be trading post and pre-earnings in Delta Strike, but I've got 5 stocks that I'm specifically watching for a post-earnings trade. Now, what happens with these stocks is they tend to have their earnings, and options tend to get oversold. So this option price that I was talking about, remember I said I would buy with both hands at 50. I have 5 stocks where with real consistency post earnings, the options get oversold. I'm going to be trading these 5 names in special situations next week and the following week. If you are a member of the masterclass, and if you already bought, don't worry, you're getting this. If you're a member of the masterclass to kind of help you with this trading and to understand kind of this earnings complex in kind of a real laboratory live trading environment, I'm going to be adding this special situation. It's a $399 value. I'm going to be adding this special situation to the masterclass for free. And if you're in special situations, congratulations, you have a banger heading your way. And special situations, I'm also getting ready to load up, if my levers hit, a volatility play as well. So stay tuned for that. But the big one, this post-earnings play, where I'm looking for this red line that measures option prices in 5 stocks, is going to get to oversold territory. And we're going to get to play in those options for free. And that is going to be really fun. And when I say free, I don't mean you're not paying. You're going to have to buy those options, but we're going to own those options for several days and not have any decay. It's going to put us at a huge advantage. And I can't wait to share this trade with you. Now, if you'd like to join special situations and walk through these 8 classes with me, where I'm going to guide you through big money flow, zero DTE trading, volatility trading and spread trading, and long-term swing trades. We're also adding in this earnings play analysis now as a part of the masterclass in a special situation that I will teach you guys with. That's a $399 value, special situations. This will be coming your way. And for masterclass people, congrats, my present to you. But this is all the more reason to join the masterclass. It kicks off tomorrow at 11:30 Make sure to, I think it was 11:30 or 1:30. Sometimes I get confused. I have a busy schedule. If you're in do you get access to the masterclass? No, Johnny, but you do. Yeah, it's at 11:30. Thank you. Do you get access if you're in Special Situation 365? Do you get access to the masterclass? No, but you get access to this special situation. And I can't wait to do this one with you guys. All right. So yes, you can join me tomorrow at 11:30. So Tesla, I'm in that wait and see mode. I am watching for this premium to get to that oversold territory. When it gets there and I see the big money step in and start buying calls or puts, then I know it's time to buy. And I'm going to be doing potentially a trade in Tesla in the next couple of days, probably in Delta Strike and potentially Trade Desk. And then we're going to be doing potentially several trades, all liquid names you've heard of in special situations next week, along with kicking off our masterclass. So the masterclass starts tomorrow at 11:30 with our kickoff event. I'm just going to answer some questions, walk you through, and it starts in earnest next Friday. We would have started this Friday, but I am off for Valentino's first communion. And so that is what we're looking at. All right, so what am I doing today in terms of the overall market? Toward the end of the day, just to recap. All right, what we talked about. All right, I'm gonna recap our whole story, and then I'm gonna dig in. All right, so I walked you through my three levers. Right, Russell is leading. Bonds are stronger. VIX, positive steps, still mixed signals. So not a full-on green light. Then I kind of walked you through why I like the Russell 2000 for the next week if the market's going higher. I explained to you when I want to start buying puts on things like VIX, UVIX by looking at that VIX curve. Then we recapped Tesla earnings, discussed what is going to happen to Tesla over the next couple of days, laid out that I'm going to be setting up a trade. We looked at IWM and TNA for trade ideas. I gave you two end-of-day potential trade ideas if the market holds up. One, the 195 calls for May 2nd in IWM, or two, the TNA May 2nd calls for like $1. The 26 calls for like $1. And then I explained to you that along with the masterclass that is worth it, right? 8 full sessions with me. I'm now giving you this special situation, post-earnings play special situation for as a gift included. And special situations, people, stay tuned because that is coming your way to the tune of next week. So be ready. All right, everybody. Do we have any questions for me? Once again, I want you to click the link that is pinned to the top. If you're already a member of Option Pit Services or anything like that, call my team, 888-872-3301, and they can talk to you about pricing and payment plans. They will take very good care of you. I promise. All right. Shane, give the team a call, 888-872-3301. You may be able to get it. I'm going to be looking at Nike in Delta Strike. Don't worry. How would you trade Google right now? Google has earnings in 2 days. I did go out and buy long-term calls in Google, I believe Monday, right? Amin's not here. I wish Amin was here. You're just dealing with me. Christian's here. He's running the room for me. He's broadcasting me. But all right, everybody. So once again, click the link in chat. If you're watching me on YouTube, please like and subscribe. Leave a question. I go through a lot of content in these videos. I'm sure you have questions. So keep these up. And guys, keep showing up. You keep showing up. I'll keep showing up. Deal? Deal. All right. Click that link or call my team 888-872-3301, and they will take very good care of you. All right, folks. I am Mark Sebastian. I am your only option. I hope you guys have a wonderful rest of your trading day. Have a good one.